What's up, guys? In today's video, I'm going to be going over my August dividend income where I received 8 paychecks. And real quick before we start, you can see my portfolio is almost at $65,000. I actually had a huge day on Friday. I want to say my portfolio went up like 800 bucks. Unfortunately, M1 Finance isn't showing that on the 1 day data. Everything's zeroed out, but $64,795.51 is pretty amazing to see in my portfolio, especially when I started it. I only started with $2,000. But with that being said, let's go into the activity feed. With only 8 paychecks, this video is going to go by pretty quick. So on August 7th, I received my first dividend for the month from Lowe's of $7.91. And if we check out Lowe's, I have just under $1,800 in this company for 7.08 shares, an average price of $226.51. Then let's see how we're doing. The current price, $248.50. So up a little bit, not that huge of a jump. It's about $20 per share or 22. They have a small dividend yield of 1.85%. However, Lowe's is a great company in general, and their most recent dividend growth rate was, I want to say, a dividend increase was like 32%. So even if they only provide a third of that in the future, that's still incredible dividend growth. And that's what I'm looking forward to holding on to Lowe's. So next we have one of my favorite companies on August 9th, Costco, where I received $4.55. And that puts me at $12.46 for the month. If we look at Costco, it's one of my larger holdings of $3,500. And Costco has honestly had amazing performance this year. I want to say it's in the 30%, but I have 3.92 shares, average price of $503.12. And then it's currently $892.38. So I've had incredible growth on Costco. And in fact, when I first bought Costco, I believe it was in the 260 to 280 range. And at that time, people were saying that Costco was way too expensive. And it just continues to rise and continues to outperform, and it's way outperforming the S&P 500. It does have a really high PE ratio, but Costco just consistently outperforms the market. So not too worried about that. They do have a very low dividend yield of 0.52%. However, they give amazing dividend increases anywhere from 12 to almost 14%. And then they gave a massive special dividend at the beginning of the year. I think I received 40 bucks, and that was their largest special dividend that they usually do every 2 years. So this is definitely a stock that I would not overlook, even at this current price. If I had a lot of extra money to put into the stock market, I'd probably put most of it into Costco. So next up, we have on August 13th, Texas Instruments, where I received $10.60, putting me at $23.06 for the month. And with Texas Instruments, I have just over $1,700, almost $1,750. I have 8.15 shares at an average price of $162.99. And then it's grown up. Honestly, it's had really great growth. Current price of $214.34. And then they have a decent dividend yield, 2.43%. I believe it was quite a bit higher, their dividend yield, but they've had some great growth over the years. And they also have great dividend growth. So that's one of the reasons that I love this company. And then we'll just go on into the next one. I love Texas Instruments. It's a great tech company with great dividend growth. And then next up, on August 15th, I received 5 dividends, $6.96 from Procter and Gamble, $6.71 from Hormel. However, if you watch one of my most recent videos, I sold Hormel. It just wasn't performing up to my standards. Next, I have $18.04 from ABBV, then $5.45 from Abbott Labs, which I also sold this stock too. And then I received $25.10 from Realty Income. So let's check out these last 3 stocks Procter and Gamble, I have just under $1,200 for 6.91 shares, average price of $134.74. And that's currently $171.54. So that has had good growth since I've owned it. They have a decent dividend yield, 2.35%. However, their dividend growth is nothing to be excited about, but this is a solid, stable company with some of the most recognizable essential brands and products. That's why I hold on to Procter and Gamble, and that's the same thing with Johnson and Johnson. But next up, we have AbbVie, which is probably my highest allocation for a healthcare company. It's one of the better healthcare companies I've owned, and I have just under $2,300 for 11.64 shares, average price of $93.70, and then a current price of $196.31. So this is one of my top performing stocks of all time. And as you can see, they have a good dividend yield, 3.16%. I actually think when I first bought it, it was in the 4 to 5% range. And they have a nice dividend growth at around 10% every single year. So all in all, this is a great healthcare company to own. And then lastly, we have Realty Income, which is just under $6,000. I think Realty Income would be the most money I have into any individual stock. So I have 95.44 shares, average price of $55.38. So it's currently sitting at $62.11. So my growth isn't that great. However, this is a stock that gives a consistent monthly dividend, 5.08% on the dividend yield, which is amazing. And their dividend growth hasn't been that great with the high interest rates. However, I'm looking forward to continuing to own Realty Income as one of my favorite REITs. And then last up, go over to my dividend chart where you can see for the month of August, I earned $85.32. So not a lot of money, but that's all right. I used to, when I invested before around, you know, the end of 2021 to 2022 and even into 23, I wanted all of my dividend income per month to be pretty close to each other. And for some time it was, you get months like 182, 173, and then 238, which is the outlier, but it's not too far. But however, the thing is with dividend income, it doesn't really matter if one month is a lot more than the other months. For the most part, the first and second month of the quarter are going to be the lower months. So months like April and May, they're supposed to be the lower months. And then June with SCHD would have been a really high month, but SCHD paid on July. But either way, my goal in the future is to live off of dividends. And the way I see it is I'll probably have a large amount of cash, and then I'll budget out like my spending for every 3 months. And then I don't even know if I'd spend all of the dividends, but that's just the way I look at it. And so guys, thank you for watching this video, and then stick around for the next one, September. I'm excited to see what SCHD pays out.